Got your eyes on a home? You'll need the local home loan experts at Guaranteed Rate Affinity. We are a fintech mortgage company that streamlined the home buying process. Our loan officers have direct access to the best real estate agents, giving you a completely seamless home buying experience. Featuring the industry's most advanced tech platform and customized loan solutions, our local loan officers can help you at any time from anywhere. Our digital mortgage and power bid approval will get you pre-approved in minutes with a strong offer even against all cash offers. You need speed to win in this market, and our same-day mortgage delivers, getting you approved in as little as 1 day. Getting you on track for the closing table in as fast as 10 days. Speaking of the closing table, our flash close options shorten the closing appointment from hours to minutes, or skip it altogether. It's your choice. We've made the home buying experience as fast, simple, and awesome as possible for countless others, and we'd love to help you next. Get pre-approved today with the experts at Guaranteed Rate Affinity, and let's get you home.
All right, good day, everybody. Thank you for joining another session of our Guaranteed Rate Affinity and Coldwell Banker kind of coaching and learning series that we're putting together at least once a month for all of you to get some insights as to what is going on in the world of lending and how we can take some of our insights and help all of our great agent partners to really feel confident when you're talking to your clients, whether buyers or sellers, and maybe having a little bit of extra high knowledge about what goes on in our world here, because there has been a lot of changes, a lot for the good, but there's a couple of things in there that we always need to make sure that you're aware of, maybe on the bad side. So this is going to be a call that is going to really, I think, provide a lot of you with some ammunition going back to your client database, and really kind of with inspiring news as to how we can help them get into a property, a home, an investment property, even reverse mortgage, renovation loans, and how we can help you, get your buyer, your seller, into the property that they've really been wanting to get into and really fall in love with. So today we have one of our amazing executives of our rate company, Kate Amore. Really some quick things with Kate. Kate came to us a couple of years ago and really had some inside track knowledge on how to create custom loan products for Guaranteed Rate Affinity and the rate companies in general. Really what this is called is non-QM or non-qualified mortgage. We brand it at Guaranteed Rate Affinity as a portfolio product, which may be a more familiar term for all of you to kind of, hear out there in the public sphere. And what we do with a lot of these portfolio programs is help our borrowers out with, maybe their income, maybe a little bit more challenging to document. We have products for that. Maybe your borrower, has a lot of equity in the property, but they may not be able to afford a house, to go into another property. Well, we have options for them as well. And so we wanted, again, to give you some ammunition to get back to your sphere of influence. And Kate is just one of these amazing leaders that we have at rate companies that is one of the top in the industry. Kate is frequently mentioned in Inman magazine, in Housing Wire, in the Crane's Chicago Business, which is kind of a Bible for business for a lot of people around the country. So super excited to have Kate Amore with us to go through the next half hour or so. And, please, if you have any questions at all or any insights when we're going through this, please use that question feature on the GoToWebinar, and we'll be monitoring that throughout the whole process. But Kate, just great to have you with us, and maybe share a little bit of more insight for yourself, and we'll get on with this.
Absolutely. So really excited to be here and talk to you guys about one of my favorite things, which is how do we help people accomplish the dream of homeownership. I'm super passionate about building products to scale and then also empowering you to do what you do best, which is help to sell more homes. So a good product is going to sit at the intersection with that. So Frank, let's pop on to the next slide and we can start talking about this amazing new product and program that we're bringing to you. This is our guaranteed rate affinity portfolio product. And I know that we always say things like non-QM, but I really think we do a disservice when we think in that limited of a stance, because this is really a program that's going to help you say yes to more borrowers. It's going to help you close more loans and purchase transactions, and it's going to help you get people who you thought maybe weren't able or ready to buy a home, and it's going to change that entire conversation because we're going to help you find more income from them in a way that's responsible, sustainable, and based on real math and numbers, something you can get behind and feel confident about. And then my favorite part of all of this is we do this on our award-winning industry-leading technology, which is the game changer. See, this is the type of product that in the past you'd have to go to a bank, wait 3 months, possibly give up your firstborn child, find out if it's going to get denied, have a bunch of issues, and guess what? We're going to do it in 14 days. Right? Yeah. Let's get out your easy button because we're going to go over some really cool programs. So let's talk about the 4 different main customers that we're able to help here. My first and my favorite, because I think it is most industrious, is our self-employed borrowers. Right? And so people who are self-employed are small business owners, independent contractors, freelancers, consultants, gig workers, realtors. I don't know. I think you guys are too, right? It's my industrious people out there that are really making that American dream come true. And the one thing that most of you share in common is you don't want to pay taxes. I can't think of anything more American than not liking to pay taxes. And you know what? It doesn't mean that you're not in a successful business. So we're not going to punish people because they have a really good CPA that's able to figure out how to write that income off. We're going to create a really cool product that qualifies people based on business cash flow. And see, that's, to me, very common sense. The other cool product we have is for property investors. Now, I know you guys love property investors because they buy many properties from you. They sell properties. They're like a bread and butter relationship where it's a gift that keeps on giving. Well, guess what? Here we have some really cool programs that are going to allow them to qualify based on property cash flow alone. It's just like a little miniature commercial loan. And that's going to be done easily, convenient, get your decision within days. Ah, love it. We're going to talk about that. We also have our asset-based programs. So we all know that person that's maybe ready for retirement, or they just happen to be blessed and have plenty of assets. And you know what? We don't care if they have a job or not. We just don't. It's going to be a true ability to repay loan, where if they have enough money to buy that house outright, we're going to give them a loan. This is just common sense lending, guys. And we're going to make that possible for you in fast turn times. And then my last favorite item that I'm just going to hint at right now is buy before you sell. So I'm going to show you an entire strategy for how you can allow your clients to buy their new house before they sell their existing house, especially if they're in a tight market where they're concerned about listing it and it selling too quickly before they can find their dream home. We've got strategies for all of these. All right, let's dive in and let's dust through what some of this could look like. So what we're really talking about here are a grouping of programs. So we've got our alt doc, bank statement, P&L style loans. And so again, those are going to be self-employed borrowers, business owners who can show consistent cash flow. These can be people who have P&Ls, which, come on, let's be real. Most businesses have a P&L. You got to manage it. You got to measure and manage, and I'm certain your accountant wants it in order to figure out how much to write off. And then we've got 1099. And then of course we have ways that we're going to qualify people with business and personal bank accounts. Now, here's the beauty of this. We're going to do these on loan amounts up to 3.5 million. Yeah, that's right. And that's just for our in-house super fast underwriting, but we also have additional options where we can do up to 30 million. No joke. All right, now let's hit our asset utilization programs. What I love
And Kate,
about, yes.
would you mind just for our audience, kind of explain what alt-doc actually, what actually means by alt-doc?
Oh, so alt-doc simply means it's an alternative to traditional old school underwriting. So in traditional old school underwriting, we are underwriting people to the nuclear concept of like a single income earner household that makes a W-2 job, you know, and we all know that that's maybe reflective of where life was 20, 30 years ago. But in today's infrastructure, many people own multiple businesses, have creative income streams, earn money through the gig economy, 1099, and just the picture for earners in the United States has completely changed. And so we think it's time to modernize our perspective on that. And so we came up with alternative documentation loans, meaning they just don't follow old school underwriting requirements. They're an add-on where we're able to say yes to more paperwork.
Got it. All right. Thank you. Hopefully that helps out. If there's any kind of acronyms that maybe we unfortunately are sneaking in there, we're trying to explain as much of our crazy acronyms as we have in the mortgage industry. I'm sure the real estate industry is no different. But please, again, let us know if there's anything that we can help reiterate or explain. And Kate, is it too much to talk about, the debt service coverage, and what does that actually mean? How can we really explain that to our agent partners?
Absolutely. So debt service coverage ratio programs are basically a positive cash flow program where we're taking the total amount of cash flow coming in on a property. And what's cash flow? Well, it's rent. So we're taking the rent and we're covering the payment. That's why it's called a debt service coverage ratio. So the rent payment should cover the total mortgage payment, tax, insurance, and assessments against that property. So this means that if a property has a positive cash flow, meaning it brings in more rental income than the underlying mortgage payment, that's a good thing, and we're going to lend you money on that.
I think it's one of those, the debt service coverage is something that I think more and more agents would probably find really useful at, those products and programs. Again, for a lot of your investors, it's kind of one of the top things that every one of the property investors will look at doing.
Oh my gosh, it's so true. And when we get into a scenario in a little bit, I think everyone's going to appreciate the beauty and cleanliness of that product because it's so simple. It's so simple, so fast, and it allows people to qualify based on the actual business loan and the underlying business investment that it is, which is just common sense small business underwriting. And we're bringing it to you here at GRA through our portfolio product. So let's dive into a particular scenario for a type of customer that we can help. So this is someone that's going to fit into our self-employed program, specifically the P&L one. And these are going to all be examples of borrowers that are getting turned down by their business. And so we have a self-employed contracting company, and he's been in business for 10 years. And this loan's already been turned down by someone, right? And their P&L is showing that they have $14,500 in monthly net income. Yet this borrower has written down a lot of their money on their tax returns. And let's say they've got multiple different businesses, right? It's complex. They've got a bunch of different businesses. There's, I once had 1,000 pages of tax returns come in on a file into underwriting. It's that kind of file. It's a mess.
Those are always fun.
Yeah, people don't want to do it. Or they're telling you that the person gets paid once a year when that contract, like I had somebody who had like an airplane company and they were getting paid once a year when they'd sell an airplane. Or even like, let's use an example of a realtor that's only closing a couple really big primo loans a year, right? And get huge commission checks, but they're not spread out every month. It can happen, especially with the commercial realtors and things like that. This is the product for you because guess what? The P&L, we're looking at that over the course of an entire year, over several years. We're not looking at every single month and being like, oh, you didn't sell a house that month. Oh man, it means you don't have any money. That's not the way it works. We're going to look at that, take that income stream, calculate that over into a monthly qualifying figure, and we're going to make that deal work. Now, we do require a CPA prepared P&L for that, but come on, you guys all have CPAs that'll prepare a P&L for you. So we're going to take that CPA prepared P&L and we're going to use that to identify your true business income and then use that for qualification purposes. So I know that you have had home deals fall apart where somebody was like, well, they don't have enough income on their tax returns. But guess what? You don't need that today. You don't need that. We just need real CPA prepared business cash flow that's existing for well-qualified borrowers, and we're going to figure out a way to make that work. All right, let's move to the next one. So 1099s, this is another favorite deal saver of mine. Now, I know we have a lot of realtor friends here who are getting paid in 1099s. We also have lots of other high income earners that get paid with 1099s. So this example is going to be a doctor. And I know this sounds crazy because you're like, how do doctors get 1099? But it happens so frequently. They can work in an emergency room and they're 1099 in a hospital. You're like, what? But yeah. Or they can go from working in a practice to working in another practice and now they're 1099. Like a dentist was a W-2 here and now they've moved over here and they're 1099. And even like, especially if it's in the same professional industry, I've seen people go from being like, say, a developer in Silicon Valley and they're W-2 here, move over here. Now it's 1099, same job. Guys, if you have somebody that meets those requirements and they're being told they have to wait 2 years in order to buy their dream home, it's not true. We've got a program that is going to make that work, especially if they're moving in the same industry. And like, think about that. That's like common sense. Now, if somebody's like going from being a doctor to a developer, now that's not the same thing. And we'd like to see some history in that. But if you are just scooting around to different jobs within the same position and it's 1099, we're going to let you qualify with 90% of that 1099 face value income. So do that math. Think about how much more you're writing off on driving around to all of your appointments and everything else that you're doing. And think about if we let you qualify on your 1099 commission check. Right, that makes sense, right? Because you know those aren't real expenses. So guys, we're gonna work this out. And we got this really cool program that is gonna allow them to be able to go and buy that $1 million property with 20% down. It just makes sense. And we don't need to have, like I said, they do not need to have 2 years of self-employment. We will do it with as little as a couple of months. So definitely a cool program. And this is something a bank and everyone else would turn down all day long. This is not getting done in Fannie Mae. This is not getting done on a conforming loan. And this is not a high risk situation. Let's be fair. These are really well qualified.
And to our realtor partners, this is probably one of the scenarios that loan officers hear the most from a potential borrower, thinking that they weren't going to have an opportunity to use their kind of income. So again, just high level, we wanted you all to be aware that there are opportunities. So if you're talking to a buyer, talking to a seller, and they feel like they made a job change, but as long as it's in the similar kind of an industry, as long as they went from 1099 to a 1099, similar industry, fine. From a W-2 to a 1099 in the similar industry, we're going to be able to do that. So genuinely, one of the top issues that our loan officers confront are talking to these potential buyers and sellers, kind of educating them. So super high level, but again, just enough to, I feel like, get you that conversation and obviously relay them to one of our guaranteed rate Affinity loan officers.
Absolutely.
But bank statements, Kate, to me, again, is another needle mover here, and something that that GRA, we have a lot of options for. Kind of excited to show all of you what we have here.
Oh yeah, for sure. This is another really cool program where somebody just has a lot of expenses they're writing off. And so this is an example of a chef that owns a high-end, catering company for the past 7 years, and their business is cash flowing over $30,000 per month. And they want to buy their dream home at 1.2 million, and they want to put 20% down. And guess what? Their taxable income is only $62,000. And you're thinking, man, they're not buying a $1.2 million house, but I'm here to tell you they can. They absolutely can, because their business is cash flowing over $30,000 a month. So we're going to be able to use a 50% expense factor and get them to a qualifying income of $15,000 a month. And that borrower is going to get approved for that full $1 million loan amount. And again, guys, this is just some common sense underwriting in another way that we're able to say yes. I love it. All right, let's move to the next slide.
Gig workers.
Yes. This one is like, nobody really thinks about it, but gig workers are like the backbone of our economy. They're all of the people who are driving the Ubers, the Lyfts, the TaskRabbits, all of the different places and spaces. I've even seen people that work in marketing or other, really awesome roles, taking side hustles, doing paid for service work. And I mean, heck, I even have people reach out and be like, "Oh, how do you feel about moonlighting over here?" It's just so common, right? And so what does that mean and how do they qualify? Well, guess what? In a lot of different instances, people require that you have more complex requirements in order to use that part-time income. And for us, we are going to look at it as long as they've got the 2 years of history, we're going to be able to take the average monthly deposits from all of those different opportunities and get them to a qualifying income. And in this case, we were able to do it for a Lyft driver over the course of 3 years, and they were able to buy their dream townhome for $350,000, all because we were able to be creative and figure out how to use actual cash flow and deposits coming in from their Lyft business. Now, what's really cool about this is they were told by the lenders they couldn't get this done, that this was like a dead in the water deal. And so, guys, if you really are being told, and especially if it's from a bank or more conservative kind of company, or they're saying, hey, this borrower needs to have a ton of money in order to pull this off, and the reality is they don't. We just need to have people with good, solid business income that's real, that's documentable, and it's going to be documented through third-party verifiable places like bank statements or CPA P&Ls, right? And so that's what's so cool about these programs, is that we're really using common sense underwriting practices, or if you took classes in finance, you'll appreciate that that's where some of this came from. All right, let's pop on to the next one. RSU income. So RSU income is.
Let's definitely explain what the RSU income actually means, because that's another acronym that we love in the mortgage industry.
Well, if everyone's not familiar with this one is restricted stock units. And I know you're like, I don't know what that is, but I'm gonna tell you it's restricted stock units. And restricted stock units are super common in the tech industry and in different types of, executive level positions. You'll often see like Amazon is also really common for having unusual restricted stock unit programs. And so you see it quite frequently, and it's used as a way to try to keep people at specific companies. But because everyone's doing it now, there's, they've created ways to make it more portable. So the restricted stock unit is basically something where it vests after a specified period of time, and that usually that period of time is like 2 years, 3 years, something longer, in order to incentivize somebody to stay with the company. So a lot of companies have created these clever schemes of paying RSU bonuses for the years in which the stock units have not vested, in order to get people in the door. Well, where we see creativity, we see opportunity to figure out a way to lend on that. So we've created a program that will allow you to use pieces and parts of that, assuming that it fits within some specified predictable requirements. So if you have a borrower that is moving around, let's say from one company in San Diego to another, or in San Francisco or wherever that might be, or is moving around, porting around, we may be able to come up with a solution for that. And so just because they're being told no by somewhere else, you should absolutely come and talk to us about that, because I think we have a solution for it. So like I said, restricted stock unit borrowers with bonuses that don't sign on bonuses, that don't think they can make it count, well, we have options for you. All right, here's another favorite for mine. How many people think you can get a loan without employment? I'm willing to
Most
guess.
people don't.
Yeah, I'm willing to guess that most people on this call think you have to have a job to get a loan. And I'm here to tell you, you don't. You don't. You just have to have a lot of money. Now, I don't think that seems unreasonable, but you know, there's two things in life that matter, right? Either you got that income stream coming in or you got a bunch of money. And for us, we got a product for you that does not involve the borrower having to take a bunch of money and park it in a bank in a lower, like in a bank account somewhere where they're not earning any interest. This is an awesome solution that does not tie them to having to do that. We have asset depletion, asset dissipation, asset utilization programs that are going to basically say, if you have enough money to pay off that loan, we're going to give it to you, or we have other calculations around it where we'll take the total sum of the money that's there and dissipate it into an income calculation. So this is a really cool program if you have a recently retired person. We've also done them for people who aren't retired, although that story sounds good. We also have people who just happen to be independently wealthy and they're doing well, and maybe they retired really early. And so we got a loan for that too. This is a really cool program because it's not tied to them having to move $1 million over into a bank, which no one wants to do. So that's what I love about this. And we're going to be able to make that work and allow them to keep their money in their crypto or whatever their higher yielding asset is that they would prefer. So definitely a cool program. All right, good fit, DSCR. So I know I said we would get to this one, and this is the one we were talking about earlier. This is another one, no income required, guys. You do not have to have a job. You just have to have a positive cash flowing property where you think that the borrower is going to make sufficient rent to be able to cover that mortgage payment. And we're going to get that deal done. And I don't care how many properties they have. Like they could have, 16, 20, unlimited. They can have a lot of different properties, which makes us a definite opportunity to continue to help you with that repeat business on that business to business relationship. We are also able to do short-term rental as well. So if somebody's doing Airbnb, VRBO, we're going to be able to figure out how to make that income stream work. And I think that's a game changer. All right, let's dive into the next one. All right, I want to make sure everybody knows we have several other really cool things that we got going on. One of them is our non-warrantable condo program within our GRA portfolio suite of solution. It is our #1 non-warrantable condo program today. We even do things like condo tells, which I think is really cool.
Would you mind maybe just refreshing what is a non-warrantable condo? Condos have obviously been through kind of a transition over the last couple of years. I believe it was the Surfside, maybe in Miami Beach, that unfortunately partially collapsed and really kind of changed the rules with how some lenders, Fannie, Freddie, Ginnie Mae, individual lenders kind of see condos. And so that non-warrantability is more important than ever to really pay attention to. More and more lenders have pulled back from lending on non-warrantable condos. Guaranteed rate we started in the downtown Chicago market, which is in a massive amount of condos. We understand condos better than most, if not all. And so the non-warrantable condo space is something that we're very comfortable and familiar with. And so, Kit, I just wanted to, go in a little bit of that rabbit hole about what is happening with the condo market. But if there's anything I missed about what technically makes a condominium non-warrantable, maybe you could share that.
Yeah, so basically the word non-warrantable means that we're not able to rep and warrant that the condo meets Fannie Mae or Freddie Mac guidelines. So the term non-warrantable really comes down to it's odd of all things, a contractual agreement between the lender and Fannie and Freddie. So anything that doesn't meet those Fannie and Freddie requirements gets dubbed non-warrantable. And that means it's not eligible for sale for a government-backed loan. Now, the beauty of all of this is that a lot of these loans are still really good and something that makes a lot of sense. So that has given us, like when one door shuts, another opens. So roughly 10% of all condos in the United States today are non-warrantable. And we finance a really large percentage of those. And so we have really cool programs that are going to help if a commercial space is in excess of conventional limits, budgets less than 10%, condo tells, which is another thing you can't sell to Fannie and Freddie, and then reduced pre-sale requirements. So if you have a new condo that you're selling, or like let's say that you got yourself into a new condo development and it hasn't hit all its pre-sale requirements, we can help with that. And then we also have flexible HOI requirements, which is homeowners insurance requirements as well. So we have some common sense solutions to solve for that. If a condo has a safety and soundness issue, that's going to be a different story. I just want to remind everybody that is exactly what Frank was talking about. There have been, the government has gotten involved since that happened with the Miami condo crash. So it was not positive. So let's hit buy before you sell. I do want to make sure that we don't miss this topic as we're coming to a close here. But my other favorite program out there is this buy before you sell program. So we have an option where clients can make an offer to buy their new home and close on it without having to sell their existing home. We're going to need them to have a letter of intent, and we're going to need them to be listing that home with you soon. However, we are going to figure out a way to let that deal get done and make it work so the borrower is not having to qualify with multiple mortgage payments in their DTI. So if you're looking for a suite of solutions that's going to empower you to be able to say yes to more clients, or to get those clients off the fence and into their dream home, move up, move down, or right size, we've got you covered with a suite of solutions. All right.
Buy before you sell. This is huge.
I know, guys. So like I said, there's no sales contract required, only a signed letter of intent. We're going to figure out how to exclude that housing payment and remove sale contingency requirements, which will increase your offer's competitiveness. I think this is a really, really cool program, and it's super helpful in competitive markets where you're worried that if they list that home, it's going to sell too quickly before they found their dream home. And so, like I said, buy before you sell is a game changer and something that you can do here with us. In addition to this, we have bridge financing, so they could take cash out. And we also have cash offer programs. So if you're talking about super competitive markets where you need solutions to get deals done, we are not, don't sleep on us, because we have options for you.
We have 10 different bridge loan options. So we are loaded with opportunities.
That is true. So I just want to remind guys, we have best in class in-house underwriting turn times. We are getting these loans done so fast and with the certainty that you need to know that we're going to get that deal done, and we're not going to make it painful. We're going to get out your easy button, and you're going to feel good about that. We also have features that are going to help with affordability. I know that sounds crazy, but we can turn these programs into affordability with amazing features that lower interest rates or extend and lower payments. And so if you're looking for somebody to partner with that's going to make a difference and really help drive creative lending solutions to get your borrowers into their dream home, we are the final destination for that. All right, guys.
I love it. And, you know, to our realtor partners, we talk about doubling our loan officers' business quite a bit. We want to coach and train our loan officers to really understand how to educate you as well as our realtor partners. And what we just want to do is offer another level of coaching insights, again, to help you, inspire more buyers, more sellers to participate in getting out there, stirring up the market and trying to get this market as healthy as possible. I wanted to give you a little bit of an insight. In the next 30 days, we're going to be doing another coaching series right off the heels of the Fed announcement, third week of September, which will be very important. So we have our leader of our capital markets team that's going to be on here going through some of the insights as to how that market how that Fed announcement is really going to play out for the rest of 2025 and going into 2026. So I hope to all see you at that point. But again, please reach out to your Guaranteed Rate Affinity loan officer. They are happy to help you and really make sure that you have a great experience along with your borrower at really trusting us, your partner at Guaranteed Rate Affinity. And Kate and Moore, you and your team are great, and I really appreciate all the help that you've given us over the last couple of years of building more opportunities for our loan officers to engage with more borrowers. So thank you very much. And everyone at Coldwell Banker, love the partnership with all of you, and can't thank you enough. But we will see you hopefully in the next call, and have a great rest of your day.
Got your eyes on a home? You'll need the local home loan experts at Guaranteed Rate Affinity. We are a fintech mortgage company that streamlined the home buying process. Our loan officers have direct access to the best real estate agents, giving you a completely seamless home buying experience. Featuring the industry's most advanced tech platform and customized loan solutions, our local loan officers can help you at any time from anywhere. Our digital mortgage and power bid approval will get you pre-approved in minutes with a strong offer, even against all cash offers. You need speed to win in this market, and our same-day mortgage delivers, getting you approved in as little as 1 day. Getting you on track for the closing table in as fast as 10 days. Speaking of the closing table, our flash close options shorten the closing appointment from hours to minutes, or skip it altogether. It's your choice. We've made the home buying experience as fast, simple, and awesome as possible for countless others, and we'd love to help you next. Get pre-approved today with the experts at Guaranteed Rate Affinity, and let's get you home.